But let's dig deep into some fundamentals surrounding these figures and, of course, projections for the new year. Dr. Biodun Adedipe is the founder, chief consultant, Adedipe Associates Limited. Well, he joins me from the United States of America to continue this conversation today. Doc, it's good to see you. Thank you so much for your time. We appreciate this.
Thank you so very much. Tolu, I'm happy to be with you today, being the last day of the year, and in fact, a good and a nice time to take a reflection of what has happened this year and then look forward to 2025. What do we expect? Thank you so very much for having me here.
Indeed, it is good to have you. I think it's good to start with a recap of what we've seen in 2024. A lot of developments in that year. You will agree with me, bold reforms, fallout of the reforms, struggling and all of that, purchasing power of Nigerians. We can go on, but give us a review of those key issues or those notable things you've seen that has happened this year and where we are at the moment.
All right, thank you so very much. Now, let me put this in perspective that when it comes to economic discourse, there are hundreds of statistics and data, which means it is a choice of the analyst of what to focus on and how to present it. And a lot of the issues come as ratios. And ratios easily also can be misinterpreted. And of course, on occasions also politicized in the way we interpret them. So I will stay within the profession, so to say. Now, there are 5 core elements we look at when we evaluate an economy, especially when you compare across different geographies. Number 1 is GDP in terms of the size. Now, if the GDP is growing, that means you are creating more value within your boundaries. And I'm happy you made reference to that, what we have experienced this year in Nigeria, and of course, how we are likely to close out today in the last day of the year. So in which case, if you look at the Nigerian economy, it has grown this year, which means we have produced more than we did at comparative periods or corresponding period of 2023, which is good news. It also means then that we are getting more productive. That is what that speaks to. So which is positive for the economy. The second thing we look at when we compare different countries' economies is the stock market performance. Again, if you look at the stock market in Nigeria, this year has been quite tremendous in terms of the growth rate of the index. As of yesterday, because the market has closed today also, a little lower than what we had yesterday, but above the 100,000, threshold. So now, when you have a stock market that closed at about 35% growth year on year, that also is a pointer to a positive development in the Nigerian economy. Of course, the third one is core inflation. Typically, what we call core inflation is take the inflation rate and back out food inflation and energy cost. Of course, we track inflation differently in Nigeria. In the sense that we look at headline inflation, we look at food inflation. Of course, we now pay into urban and rural. Now, when you look at this, yes, there is nothing to cheer much there. But we know the major element is food inflation. So the question then going forward to 2025 would be, what has the government done now? What do they intend to do in 2025? How will that impact the rate of inflation? Then unemployment, of course, which we have faced the reality today. Yes, not only that, we've chosen to measure it using the new definition by the International Labour Organization, which is now recognizing that being self-employed is also a form of employment. We're now looking at the number of hours that you are engaged, in which case in income earning activity. Of course, the fifth of them is government deficits, which is, of course, the area that is worrisome for Nigeria. So when you look at GDP growth rate, as you said earlier on, positive for this year, when you look at the exchange value of the Naira, which unfortunately is where we dissipate so much energy, but we often forget that the exchange value of a currency is the outcome of the interaction of several variables, starting from how productive you are, what are you producing and selling to the rest of the world, and what are you buying from them. Once there's an imbalance in that nexus, it will affect the value of your currency. What we talk about mostly is, oh, the Naira has lost value, the Naira has gained value. But the positive thing we are taking out of 2024 is that it has stabilized within a defined range, which is positive. So which means going to 2025, the question will be, how do we now build the capacity that will enhance the value of the Naira? If we look at oil price also, somehow it's been favorable, especially when you look at how it has behaved most of this year. The oil market has reacted on a daily basis to what is happening in China. They're the second largest economy in the world, but every time the oil prices move in response to what is happening to the Chinese economy, and now their own government is responding. The latest stimulus, as you mentioned in the Asian stock market, even in the US, the latest stimulus announced by the Chinese government a couple of days ago is what has now stimulated the markets. The markets are now upbeat. Okay, Chinese economy is likely to grow next year. If it grows well, then that is good news for the demand for hydrocarbons, which of course will also impact Nigeria anyway. We are producing more now, no doubt. Latest data put out by Central Bank puts November output at 1.49 million barrels per day. So which of course is good news for Nigeria compared to where we were in 2023. That's improvement. The last I will say here relates to the nexus between monetary policy rate, that's interest rate, which of course we know at 27.5%, and of course 875 basis points increase within this year alone. But that of course has to, side. There are pros and cons. The pro is that it has made Naira assets attractive and therefore made a lot of portfolio investors to troop into Nigeria. And we see that in our capital importation, with the figure for the first 3 quarters of this year at $7.53 billion, significantly is higher than the whole of 2023, the whole of 2022, the whole of 2021. So we are looking at getting back to 2019, 2020, if this is maintained. So all of these are positive signs, but they point to areas where there is still more work to be done. Thank you very much.
We are going to get to that point where more work needs to be done. Now, I'm looking at the dashboard, the macroeconomic dashboard as prepared by you, of course, and a very interesting document here. And I'm taking you straight to the 2025 proposed fiscal budget and, of course, debt servicing. Let's look at some of these projections and assumptions. Exchange rate, 1,400 Naira to a dollar. Crude oil benchmark at about $75 per barrel assumptions. And production estimates are 2.06 million barrels per day. The focus is stability, efficiency, sustainable economic growth. I hope this is not too ambitious. What is your understanding of this spending plan?
Well, for me, it is not too ambitious. And I come from the perspective of, one, what is the situation of the oil market, which I just explained. So I don't see oil price going southwards in terms of, relativity with this assumption in the budget. That's number one. I've had many analysts say also the oil production assumption of 2.06 million barrels per day is aggressive. I don't really see it as such, because when you talk about oil production, we often forget that there's a component of about 200,000 barrels per day of condensate, which of course is not in their location. It's an addition to whatever we produce. So when you consider the fact that there's an improvement now in terms of tracking and monitoring our oil production and export, we saw some video that went viral on NNPC's control room. Fantastic, looking like a version of that of Aramco Saudi. All right. Now, what that tells you is that we are likely to see oil production also increase in 2025, given the application of technology to monitor and control. So if that happens, and then the new investments that we also see that are coming to that space, now notice also like Shell divesting its onshore asset, but it is to, an indigenous firm that will still be producing. So in which case, we are not losing out in any way in terms of OIC's divesting. And the pattern then tells me that this oil production assumption is not unrealistic. Let me put it that way. Because most people say it is unrealistic, but I don't think it is. So now, exchange value of the naira, yes, 1,400 naira to a dollar seems to be optimistic in terms of appreciation of the value. But when you play it against the likely scenario we are looking at as the outlook, it will only result in more revenue in the pocket. If you are working with 1,500 naira to a dollar, and that's the assumption that the Senate doesn't move this assumption, but if they retain this assumption, it means our revenue projection will be less than what it is likely to be when you bring the exchange value into the equation. So all of these, to me, are assumptions that look very realistic. And now we come to the numbers, and that's, I will just mention that, and then we can progress the conversation. Now, when you look at the budget figures, especially the expenditure, now you convert to naira, to US dollar, and the current exchange value of the naira, it will give you a bigger value in dollar terms than what we had for 2024, and in fact, than what we had for 2023, which means the spend plan, as we call it, is actually also in the right direction. So what we now will interrogate is what portion of that is going to capital, and what is the nature of the capital items that we are spending on. That is where we begin to extract value from this budget. Thank you.
Interesting now, and I think we need to drive quickly to see the key issues. Dr. Adedipe, you would agree with me, fiscal challenges still persist, high debt service, and of course, revenue generation to GDP and all of that. And of course, do you think CBN would maintain this MPR momentum until inflation starts to taper down? That is one question that many are waiting for answer. I spoke to Dr. Yusuf yesterday, and he was talking about the rail sector borrowing at about 35%, the negative impact for that. So what are these key issues that you think needs to be tackled very quickly, and what are the solutions to them, or what are the quick wins for government?
All right. Now, in terms of outlook, my own expectation, this comes from various, let me say, indices that we watch informing opinions about where interested to go. Number one is the indication, we call it rate guidance, given by the central bank governor, who said the CBN itself also is looking at the MPR being now to go in the direction of reduction next year. Now, we call that rate guidance. They understand quite well that where the MPR is making lending rates very, very, call it punitive in a way for the real sector. So the CBN has already, admitted that, and of course, has sounded an indication that the MPR will likely be reduced next year. So that's part of our outlook. We expect the MPR to drop in 2025. But we play that also against the positive influence it has had in terms of not only remittances by diaspora Nigerians, but more importantly, foreign portfolio investors who have brought in several billions of dollars. So the question is, if we are going to reduce it at all, it should not be done aggressively, and that's what we expect. So MPR, we expect will drop in 2025, no doubt. That will moderate lending risk to some extent. It will not drop significantly in terms of coming below 20%. So we still see it as above 20%. So in 2025. So if that is the case, yeah, there will be some respite in lending rate, no doubt. But we don't want to also create panic for FPIs, that is the foreign portfolio investors, to troop out of Nigeria. That is what we expect in that regard. Of course, that rate being high, and people often, most analysts often forget this, that when the MPR is high, it also means treasury bills are high. We all know that quite all right. But we forget that treasury bill is a short-term debt instrument issued on behalf of the government by the central bank. Which means when we talk about debt service of the federal government of Nigeria, we tend to forget that a lot of that cost is also coming from what the government pays out on treasury bills. All right? So in which case, that also moderating will have an impact on debt service by the government itself. Thank you.
Now, let's wrap this conversation up with how government can, of course, expand non-oil revenue. And, of course, your comments around this tax reforms, exports, that's also non-oil sector. What is your take with that? And what are your expectations in 2025?
Thank you so very much. Now, in 2025, I expect agri to pick up strongly and on account of a number of things. Number one is that the government this year has embarked on revival of our river basin authorities, not by merely appointing, boards for them and directors for their boards, but equally making funds available to revive the irrigation system. That means we're already in the direction of transiting from rain-fed farming to all year-round farming because of irrigation. That is one. That will, of course, impact agri productivity. Now, secondly, is that there are also pointers to improvement in security that will also enable farmers within certain locations to return to their farms, and that will contribute to harvest. Thirdly, there are now also foreign entities that are investing in the agri space in Nigeria. An example is investment by this Saudi Arabia, entity in Olam in Nigeria here. It's very significant, over $1 billion investment. That is the agri sector. I know there's a lot happening in some other entities as well that I won't go into specifics right now. So agri productivity increases, then we are likely to see that impact food inflation on the one hand and therefore enhance food security. Then, of course, that growth will also filter into growth of the GDP, making our GDP growth rate more robust in 2025, going beyond the services that have produced the growth we have seen in 2024. Now, that on the one side, we look also, of course, services will still remain robust and still continue to grow because that is a pattern globally anyway, and Nigeria is flowing in that direction. Now, when you take what is happening in logistics, you mentioned that earlier in your initial review of the economy and GDP's performance. Logistics is also a space that is getting better by the day in Nigeria in terms of players, in terms of new assets, and of course, in terms of efficiency. So that, again, will also bring some growth opportunities, for the economy. So all put together, we see an economy in 2025 that will grow stronger than what we have seen in 2024. Thank you.
Interesting conversation, Doc. I know we can go on, and I must thank you so much for your time, the time difference and all of that for you joining the program. We really do appreciate this, and we wish you a happy new year, a great 2025, where we'll have wonderful conversations and see how our economy rolls out. Dr. Biodun Adedipe, thank you so much for your time. Chief Consultant, Founder, Adedipe and Associates Limited. Thank you so much.
Thank you so very much, Tolu, for having me. A happy new year, prosperous 2025 to you and all Nigerians. God bless you all.
All right, there. Thank you so much. Coming up on the show, let's now stay with the oil.